Hello everyone, this is Andrew McNair from SWAN Capital with our informational economic update for January 2019. In this month's video, I'm going to discuss major headlines that influence markets in December, but provide you insight into what these developments could mean for you as an investor. Now, as always, please stay tuned at the end of this video for some required disclosure statements. So, how did we finish 2018? To put it bluntly, December was a challenging and volatile month for stocks as equities really ricocheted between losses and gains. To really get a simple illustration of how dramatic the turbulence really was, consider the Dow's performance on the days surrounding Christmas. For the first time, the Dow experienced its worst Christmas Eve in history. Talk about the Grinch Christmas. Then the very next trading day, the index posted the largest points gain ever. That experience was pretty much December 2018 in a nutshell. In fact, despite positive returns on the year's final trading day, the Dow and the S&P 500 had their worst December results since 1931. And if you look at all three major domestic indexes like the S&P 500, the Dow, and the NASDAQ, all down 5% and 4% for the NASDAQ respectively. So if we look at the indexes, they were just now reaching new record highs. But why the big change? Many investors sold off stocks in reactions to worries about economic growth, the Federal Reserve's policies, and ongoing trade tension. However, that answer could really oversimplify the situation. Some people blamed computer-generated tradings for these intense fluctuations. Others said, we're just in a period of hypersensitivity to headlines. Of course, investors had many headlines to digest, including the government shutdown that was already on its 10th day by New Year's Eve. But we want to take a moment to look beyond the biggest headlines and see what the data told us in December. In the latest readings, we learned that the personal incomes of consumers was up 4% over the same time in 2017. That's huge. The manufacturing and service sectors both beat expectations. And the economy also grew at 3% annualized rate in the third quarter. That reading even beat the initial projections. In other words, there's several data points that are showing that beneath this market's gyrations and movements, the economy is still strong. Now, if we take our focus to interest rate policies, Federal Reserve Chairman Powell echoed the sentiments that we're talking about today, announcing interest rate increases in December despite the fluctuations. More concerns might be here, and the markets might not like more interest rate increases. But by the Fed's assessment, our current circumstances indicate a very healthy economy. In the new year ahead, we want to continue to monitor the markets for real risks and opportunities. One thing that won't sway us, though, is however are these headlines. And that's it for this month's economic update. If you're a client of SWAN Capital, I want to encourage you to RSVP for our State of the Markets event, which will be going deeper in January about what is happening in the market and what's to expect coming up. Again, signing off for the month of January 2019, this is SWAN Capital. Have a wonderful January.